Hello traders, Gary Wagner here just after 12:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, November 17th, 2017, and this is the Daily Report for Gold and Silver. Gold traders have been waiting quite some time to finally experience a breakout of that tight, defined trading range that was so much the characteristic of gold pricing over the last month and a half. Gold surging up $16, $16.20 on the close, closing just shy of $1,300, $12.94.40. And we had silver also showing a respectable gain, although in terms of percentage gains, not nearly what we saw in gold, but it did close 23 cents higher at $17.30. And the dollar was nominally lower, off about 0.25% at 93.61. Traders, any way you want to look at it, today's upside surge was truly significant and absolutely a breakout, and a breakout of a narrowly defined range that has pretty much plagued gold traders for the last month. If we look back, this goes back throughout November into October, we can see that we've had these series of highs that have been unable to really go past a level of resistance at about 1285. We can see that that began really in October, here and here. We had one test of it here. We had a very brief period in which the best characteristic we could say was we had really a rounded top in here. The market did attempt to break out, but of course came out. And then of course there was last week's breakout, but the market came up, and rather than follow through, it fell back the very next day. And that happened just a couple of days ago. We're looking at a very short-term chart, and on this chart, we can absolutely see that not only have we broken above 85, but we've broken above these extreme tops that came in from this rounded corner here, as well as this particular price point here. And traders, while it was quite obvious when we looked at that short-term chart, when we move over to our daily chart, it becomes impeccably clear in terms of this upper level at about 1290. That's right here. We can see these series of tops that came in. At the same time, we can see this defined and rounded bottom that came in all well above the 200-day moving average, which of course takes us to our current read and our current day's activity. And to me, the most significant feature on a technical basis today is the fact that we traded and closed well above the 50-day moving average. The first time that we've done it, except for this small little spike here, ever since this market had a tremendous $163 rally and then broke back below the 50-day moving average. It's sat below the 50-day moving average for the better part of the last 2 months. So that today's move is highly significant, and I believe signals really the beginning of a rally, and most importantly, we can define the conclusion of this long corrective wave that had a couple of knee-jerk reactions. Although it always maintained a price point above a 200-day moving average, it was really mired or stuck within this defined range. Then we had these scouting parties. When we talked about that a little bit last week, when I wrote a couple of articles calling for the fact that what we were witnessing was a scouting party, we took a stab at the market, ineffective because we took a loss on that. It went right back within that range. That's this candle here, and then traded sideways through the rest of the week. That was up till today. And that's why I'm so excited about today's activity. We'll look to enter the market from the long side at the beginning of the week. Today, I wanted to see not only follow through, but I wanted to see an effective close near the highs. We got that. I also wanted to see an effective close above our 50-day moving average. We got that. Our next real marks, I believe this is going to be fairly minor. This comes in right at around 13. And of course, this mark will be a little bit stronger than the 1300. That comes in, I believe, 1309. But once we are above and clear that hurdle, 1309, I believe we've got a real shot to take out the yearly highs right now, which are sitting at 1363. And traders, lastly, I do want to reference our subscribers that are still long this market. As you know, our stop was hit, but hit within $1 of the lows that came in. And we did have about 25% of our subscriber base have their stop below that. And those subscribers are still effectively long that market. As I spoke about on yesterday's show, it would be most prudent to look to trail those stops up. You could do that next week and even add to your position as we initiate longs for those that are currently flat. And traders, lastly, we're looking at a daily Bitcoin chart. This is actually off of the Gold Forecast site. Subscribers and non-subscribers can pull up any charts with a whole series of technical studies and chart gold, silver, stocks, and Bitcoin right off of our website. Simply go to thegoldforecast.com and click on the charts button. But we're looking at a daily Bitcoin chart. And one of the reasons that I believe it's so critical right now that we take a look at that is the amount that Bitcoins have actually moved up, considering the fact they've gone up over 700% this year. Once they begin to trade on the Chicago Mercantile Exchange next month, they're planning on this the second week of December. We can take a look at how it's traded through November after touching on nearly a price of $8,000 per Bitcoin. The market tracked back down to almost $5,000. That's a tremendous swing in a month, and now is pretty much back at that $8,000 mark. Today closing at about $7,865 per Bitcoin. So if you can, there's an anonymous survey. Please go ahead and take that and let us know your interest in trading Bitcoins and investing in Bitcoins once they become available on the CME next month. Traders, absolutely no doubt, we have been mired with the fact that gold has been trading in a narrow and defined range. It's very difficult to be able to create any kind of a trading strategy, especially when you're a trend trader such as we are, when the market is sitting in a $20 range. We finally broke out of that range today. I will tell you, if we get follow through at the beginning of next week, to me it's a clear indication that the long corrective period that we have been experiencing is over. We will talk about certain price levels, which is really 1309, and after that is about 1360. So even though we might get in a little late for the party by putting on a position next week, we will certainly be able to experience some impressive gains. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update. Bye-bye.